Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Friday, July 26th, the year's 2019. Let's talk trading. Weekly wrap up. I hope everybody's had a really good week this week. And during the week, I sure hope you've employed your money and risk management. By now, if you've been watching my videos for weeks, months, or years, you guys should be experts at this. Okay, look at the euro yen. Look at the travel it's had during the week. We're right back pretty much at the weekly open, and the price had gone up 56 pips and down 76 pips. And of course, the gap's all filled. So when you come back to trading Sunday/Monday, look for those opening gaps. One thing to note here, remember we had this crazy spike. Look at where price, how far down price got this past week. So, one other thing, if you're in the candle patterns, we pretty much have a doji at the moment. So if this stays in single digits close to open, you can almost consider that a doji. And usually what happens is a reversal. Now we had one, this one right here, was almost a doji. Let's see, we opened at 59, closed at 47. Well, that's what, about 12 pips, so not so much. But then there was this one here, and we didn't get a reversal. This one here. But let's see where price opens and compare to the midpoint of the candle, if we get it above the midpoint or if we get it below. And I would say if price opens above on the weekly, look for price to go up next week. Of course, I could be wrong, and you know, these videos are for educational purposes only, and your results may differ from mine. So remember, Forex trading is very, very, very risky. And if you need financial advice, seek it from an accredited financial professional, right? On the daily, we opened above the midpoint, but boom. Well, basically we're getting one of the previous day's midpoint here. We're getting just some retracement. But I'm looking to see price go in this direction. And once again, if you look at that opening day range here, you see on Tuesday it left it, then yesterday, Thursday, it entered back into the range and actually exited on top. Here we opened in the range, small breakout to the top there, 19 versus about 16, so only a couple of pips. But if you were paying attention to this level right here, you would have known this. Either just take a couple pip profit or scratch that trade. See, that's why some people say, well, you draw these horizontal lines everywhere, of course it's going to do something. Well, yeah, price is going to cut through them. But the thing is, it's just nice to know where these particular lines, these levels are, so you can have some clue what to do. Because maybe when you start trading, you're in here, or maybe you start trading here. And if you think, oh, maybe I should keep going long, price is going up, well, you would have said, but wait a minute, there's a low point. Let's see how price reacts. And you can trade appropriately, in the appropriate direction, I should say. And you see we got above the month of June's open, but we just crossed below it right here. So we'll see what happens. And then looking at that opening range of June, you see we went right through it, got back in it. We're almost heading out of it. But once again, I believe price is going to go to the upside. Inside bar traders, here you go. There's that last daily inside bar. You see here, every time price got back in. It then price got rejected. And right now, if you took this level, that's a nice 33 pip trade. So you can see here how these horizontal lines play out. Now, you can either use just one of these methods, or you can look at each one of these and have your screen loaded, or flip back and forth and say, where is price? Where is price? Where is price? You know, compared to what? It's all relative. And so once again here, and you see there was a couple of inside bar trades right here, pound dollar being one. A lot of volatility in the pound pairs. A lot of action there. But today, I guess after yesterday, traders are tired. No pairs over 100. Euro yen only 40 pips. Dollar yen only 27. I mean, how are we supposed to make any money in these tight ranges? Well, just got to grab those 5-10 pip trades when you can. And as you can see here, we're moving down. You know, barely any room for rat zones there. And in fact, hats off, there's a new trader out on the pirate ship, and they're employing the rat zone, and they're finding it to be profitable. So hats off to them. And looking at our holos, you know, there's one thing about the holo trade that you have to understand, especially on a daily basis. You know, the wick zone trade and the buy zone. If you take a look at them, you can see how they're all using the daily open. And as we hit those other charts, I'll show you exactly what I mean. But as you can see, we just put in a H1 lowest open for the day right there. Okay, buy zone. That's the daily open, 121.06. So keep that number in mind. Okay, we had a pivot way down here. So all our trades, we'd be looking short, so we would have ignored those if you're you know, fading the pivot, meaning trading towards it from the open to the pivot. That's fading the pivot. So you see right here, there was a trigger. It came back, went down, and then you can see here as it's reversing, you should have just taken those pips. Come back here once again, same thing happened, just take a few pips. Here, same thing happened, and then it's coming back. Take some more pips, and then right here it's coming back down through it. Take the trade, get the pivot. And people are going to say, "Oh, that's hindsight." Well, that's how you trade it. So the next time this happens, do it. Now, once again, 121.06. Keep that number in mind. As you can see here, the rat zones are on top of each or edge to edge, so there's no real rat zone trading on this pair. Okay, as you can see, we let me put this back to H4 since it is Friday so we can get a bigger view here. And it's taking its own sweet time. There we go. So you see, we hit that weekly pivot again. Remember, I told you about that on Monday. And so we've got, let's see, Friday, Thursday, Wednesday, Tuesday, Monday. Remember, we took out that pivot earlier in the week. Then we came all the way down. We hit S2, and then we returned to the pivot. And you can see we took out the pivot. We still have a missed pivot. July here, 122.68. We're 186 pips below it. And we've got 3 trading days in the month of July. We just might have a missed pivot for July. Price action trading. As you can see, we didn't really have many balls here. We've only got the 2 ball here right now, so we're looking to go long at 90. But remembering, when you see these balls appear, it's if price is down here, see price already exited. It started here, exited, but price doesn't like to stay within any of these 2 lines, so it usually opens and exits. There are exceptions like right here and right here, but for the most part, there's another exception, and sometimes it barely exits. So just keep that in mind as you're trading. Now, the wick zone, remember right here, this was yesterday's open. Okay, so we've got the buy zone would be a little below the wick zone and just a little above this level. So if price comes up here, rather than waiting to hit that short trigger, you can just do a wick zone trade. Even though you're looking for a buy zone, you can take that and do the wick zone. So know where the open is in relation to the previous day, because the open and close, except on the Monday, are usually one and the same. So you see here, this was the close. This is today's open. This is yesterday's close. I hope I said that earlier. I may have said it backwards, but this is today's open, yesterday's close. Price went up into the wick zone, and remember, it actually triggered a buy, but because the pivot was down there, the pivot traders were looking to fade. So you see here, you come and you take it right there at the open, which is the exit of that upper wick zone. So that's how those zones combine. And then if you also think about it, you see you're pulling off of a high. And so even though there wasn't a true rat zone, you're pulling off of the current daily high, crossing through the open. And remember, part of the range is we're looking at high to close and close to low. So when you have the open's always going to be part of today's wick. Okay? It's either going to be low to the open for the lower wick, or it's going to be high to the open for the upper wick. So you see here for today, here's the open, there's the high. So price came down, that's all wick. I hope you understand that, because it's one of those things when you see how these things combine. And so with the daily open, you are also can be trading the buy zone, the wick zone, those two. And it's basically comes from, physics or the math, because we're going to have wicks, we're going to have range. Okay? I mean, the only time you don't have a wick is if the open is the same as the low and the close is the same as the high, or the open is the same as the high and the close is the same as the low. And it happens, but it's very rare, especially on a daily chart. And once again, here we go. One of my favorite places to trade. Here's yesterday's low. You see price this was yesterday. Put it in there, put the high in there, and then you can see today how we're just kind of waffling. We've got previous month's open right there. And you can see we're red on the month. And it's Friday, not much range at the tick level. And since I opened the portfolio, as you can see, it triggered a trade, but came back pretty much a 1 pipper or a scratch. So, fellow traders, Hope you had a good week. Have a safe weekend. When you come back, remember, it's not what you trade, it's how you trade it. So come back to drain the banks.